Is Canopy Growth a good investment? A few years ago, I would have said their main brands, like Houseplant, LBS, and their flagship brand Tweed, were overpriced garbage and they were going nowhere. Some time ago, they bought Craft, which offers fairly good product at a reasonable price. They also bought 7 Acres, which, in my opinion, is even better in that respect. I half-jokingly sent them an email suggesting they scrap Houseplant, LBS, and simply become Craft and 7 Acres, and make TWD their large format brand. Likely due to large-scale customer feedback and sales data, more so than my email, they ended up doing exactly that. Also, they seem to have learned valuable growing lessons from their acquisitions, and their Tweed brand is much improved. But looking at their financials, you see that their gross margin is negative 2%. Then they have significant operating costs, meaning they're burning through a lot of money. Their negative gross margin may be due to the fact that they invested heavily in terrible products such as CBD drinks, which are never going anywhere. The CEO used to go on CNBC and brag about how they're number one in CBD drinks, but that's far less impressive than they made it seem. But a big reason for that is because they could legally sell that in the States, CBD products. So they're trying to get a foothold in that very large market. Will their margins improve as they drop the losing products and focus on what works? They have a long way to go, but speaking of the States, they have a provisional agreement to buy Acreage Holdings. If and when cannabis becomes legal in the States, then Canopy will buy this company. And this company, based on their financials, looks alright. They have 40+% gross margin, and they're operating at near break-even. I'm Canadian, so I haven't tried any of their product firsthand, but based on their numbers, it's probably alright. So their ability to quickly scale into the US market, if and when an opportunity presents itself, is a big advantage for them. They also own something called BioSteel, which is a sugar-free workout drink which I've never tried and know nothing about. It could be huge, it could be a drag on earnings for a long time. It's impossible to say from my perspective. Looking at their balance sheet, they do have enough cash to stay liquid for at least a little while, but they have even more debt. And given how much cash they're burning, the effects of their turnaround better be sudden and drastic, or they may run out of time. And that's why I prefer Decibel Cannabis, because they don't need a turnaround. They're already making enough money to fix their balance sheet, and maybe start buying back shares in the not-too-distant future.